Well, time to check in on the markets now with our business reporter, Edward Boyd. Ed, the US market slipped overnight, so how did our market react?
Laura, the ASX 200 is down about 0.8% in early trade, so almost down 1%. It's really after the US markets fell. There's fears over there of the Delta strain shutting down the economy again, so investors are a bit concerned. So our market has fallen too. But look, the big news today that could shift our stock market even more is the GDP numbers, which come out at 11:30 from the Bureau of Statistics. This is for the second quarter, the June quarter. We know over that 3-month period, roughly 29 days was spent in lockdown across various different cities around Australia. We know lockdowns are bad for economic growth. Expect to see less business investment as businesses lose confidence in investing in the future. However, iron ore prices were high in that quarter. That will give our economic numbers a bit of a boost. But let's look at some of the predictions here from the major banks. In the quarterly growth for June, Westpac's expecting just 0.1% growth, CBA 0.3%, ANZ a bit rosier 0.4%, and NAB just 0.1%, which is a very low figure. And then looking at the annual figures here, you can see they're pretty high. They're around the 8.5% to 9% mark for annual GDP growth. And that's really because this time last year, the economy went backwards by 7%. But it's a pretty critical figure today, Laura, because we know the current quarter that we're in, Q3, is going to be a negative reading for our economy.
Yeah, indeed. And look, the June quarter is probably going to look good compared to the current quarter that we're in at the moment. But what should we expect with these GDP numbers today? What are the chances that the numbers show negative growth?
Look, I was chatting to Commonwealth Bank yesterday and they say there's a 1 in 3 chance, so a 33% chance of the second quarter being negative, because some of these economists are predicting just 0.1% growth over that quarter. If their models are off just a touch, it's going to read negative. So, look, Commonwealth Bank's Gareth Aird, I've got a quote here from him. He says, for all intents and purposes, the Australian economy is currently in a manufactured recession as we go through another huge negative shock. The government, the Reserve Bank and most in the media have refrained from using the R word to date to describe what is currently happening in the economy. That will be inescapable if the ABS throws up a negative number. So a technical recession is obviously 2 quarters in a row of negative GDP growth. Yeah. This quarter we're expecting about 0.4%, but it could be negative. And if it is, it means we'll be heading to a recession over the next couple of months.
Okay, so we're talking about a double dip recession potentially. A lot of businesses are trying to look through the pandemic and looking at the bounce back, I guess, after the lockdown last time. So, I mean, a recession sounds really bad. A double dip recession sounds even worse, Ed. But is there a silver lining here? Is that, once lockdowns end, once we're fully vaccinated, is there a bounce back?
Look, there's definitely going to be a very strong bounce back once these restrictions are eased. Lots of businesses, we've just had the company reporting season, they're all talking about the previous lockdowns last year. The bounce back was very strong. They're expecting a lot of pent-up demand in the economy. People are going to want to start spending money again, travelling around Australia and the world. And that's going to be great for our economy. It's going to be good for our exports as well and really turbocharge business. But until things open up, we're going to be in this area of muted economic activity, and that's what we're in right now.
Yeah, which is not great for confidence at any level, spending, consumer confidence or business investment. Ed, thanks so much.